really thrilled to kick off our event with a keynote address that promises to set an even more inspiring tone for the day ahead. We have the distinct honor of welcoming a true giant in the world of banking and finance, a visionary who has not only shaped India's financial landscape, but also left an indelible mark on the global stage. And when he walked in today, you really could feel that he is a giant. The kind of ripple effect he created in this room by just walking in was truly immense. Our keynote speaker this morning is none other than Mr. K.V. Kamath, a legendary figure in the world of finance. With over 5 decades of experience, he has built organizations and spearheaded innovations that have redefined banking as we know it. Mr. Kamath began his illustrious journey at ICICI in 1971 and went on to serve as its managing director and CEO, leading its transformation into a tech-driven global powerhouse. His influence extended beyond India when he became the first president of the New Development Bank, championing sustainable projects across emerging markets. Currently, he serves as the non-executive chairman of Jio Financial Services, further driving growth in India's financial ecosystem. Beyond banking, his leadership has graced organizations like Infosys and the World Economic Forum. A Padma Bhushan awardee, Mr. Kamath is a symbol of visionary leadership and excellence. Ladies and gentlemen, please join me in warmly welcoming our keynote speaker, Mr. K.V. Kamath, with a huge round of applause.
It's truly a pleasure to be here with all of you at Samvad, and it was even more of a pleasure to hear the progress that has been made in just this short period of time that people have been at work on the next phase of open finance, leading to hopefully financial inclusion for the country. The dawn of an era which has brought us here today, in my view, starts with Nandan Nilekani, who will, I'm sure, join us a little later in the day, and Aadhaar. And then JAM happened. And banking the unbanked 600 million people became possible. These 600 million people were brought into mainstream banking through the Jan Dhan process. And just to put that in perspective, and that happened in 2014, 2015, 10 years earlier, we had set a dream when I was in ICICI to bank the unbanked 600 million, and that was not fulfilled. It was not fulfilled because there were a whole lot of challenges. Technology was not developed to the extent it could have been or should have been. And B, data and connectivity had not reached the mass villages. The people who reside in the villages of India, they did not have access to technology. So I'm talking of a shift from 2005, then as I said, Nandan happened, and then you come to 2015 or so, and then Jan Dhan happens, and you have banked the unbanked people of India. But to me, that was yet an unfinished story, and that story is now getting fulfilled. So I don't want to say that it is an unfinished story that was left unattended. It is now being brought to fruition again by Nandan and the team here to drive it to what I call the conclusion of the JAM story that started 10 years back or so. What has changed to make that dream possible of completing that story? I think 2 or 3 things. One is clearly data connectivity. We have seen the progress in the last few years. The cost of data has crashed, and devices, every device that you have in your pocket has now become affordable to every Indian. Of course, along with this, there are certain even newer things that are happening today, and I'm sure those will be interwoven, overlaid, or whatever technical phraseology we want to use, into what is being done today in the context of open finance. And that, I think, is using intelligence as infrastructure. Intelligence as infrastructure. And I would say that with AI, and I won't talk too much of AI, with AI, the way I look at it, intelligence is democratized. So democratization of intelligence and intelligence infrastructure will drive the next wave of taking this to the masses. And I would put it in a slightly tighter context to say that there's a digital super cycle at play, which is now, I think that cycle is now running at speed. And in India, this cycle is driven by 3 or 4 different things. One is the demographic. And I don't necessarily mean the demographic dividend that we talk of. Demographic, in my context that I'm speaking, is an old person or a young person across demographic profiles can use technology, can, I'm sure, use everything that we have to offer here and the fruits of whatever we have done in the last 3-4 years. It is democratic. Again, I don't mean in the terms of democracy as is understood, but it is available to all, cutting across, across the swathes of the country, the rich, the poor. It is available to all. So it is democratized. As intelligence, I said, is democratized, access is now democratized. And dematerialized and demonetized, in sense, dematerialized in the sense that you have a device or you have something that you use which is no longer a physical asset. Take, like say, what's happened with an Airbnb or things that you may not own but you use, and demonetized, again, a single device doing 10 different things, the device in your pocket, for example. So the digital super cycle is going to drive everything that we do as we go along, and overlay on that the good work that has been done, I think is going to help us drive the next evolution of JAM. So I said it was an unfinished story, but the progress that has been made now in the last few years allows us to take that story to completion. And that would happen, in my view. JAM would be, the next evolution of JAM would democratize access to financial services. We are seeing that today, but I saw the number, since there is almost $1 billion a month as lending happening through the account aggregator framework. That's $12 billion a year, and that is the start. So you can say that it is going to be X number of times that number going to the future, and then relate it to what is the incremental lending that is happening today. I will leave that arithmetic to you, and you will be surprised that in the next 3-4 years, through the account aggregator network, the lending that will happen will be the most significant part of all lending that will take place. I would leave that as an arithmetic exercise to you later in the day by applying your own multiple to the $1 billion that is already happening per month. And this will, of course, happen through an open, inclusive, and safe financial system. And thus, we stand at a pivotal moment in our financial sector, a moment not just about the next step in digitization, but about something far more profound, creating real empowerment for every individual, every household, and every business across the country. And that was well brought out in the few slides that Mahesh and Siddharth put out earlier. I will just endorse, and I think Mahesh said that when we met earlier a few months back, we talked about the personal balance sheet. And actually, I didn't mean the personal balance sheet of people like us in this room. I meant the personal balance sheet of somebody at the bottom of the pyramid. Why do I say that is important? Because without that, there is no progress. And for long, the person at the bottom of the pyramid, all that he has as a balance sheet is the savings in his bank account. That saving has not been converted into investment, and investment which then grows and grows at a very rapid rate. And I would think that is one big step that this provides. That is the view of a balance sheet, and then the ability to look at converting what lies as savings in a bank account into other productive assets which would give him wealth in the future. And I would think that that's going to be a revolutionary change. The ability to see your account, your balance sheet at one spot, I think is going to revolutionize the way a lay individual starting from the bottom of the pyramid to somebody with the higher means would be able to look at and transact with his finances. I can say this, I talked about the bottom of the pyramid. I could not see, now I can, could not see my own balance sheet at one spot. I do not know how many of you have tried to do that. If you have multiple bank accounts, if you have multiple Demat account, you may have only one or two Demat accounts, and then if you have, definitely you will have multiple portfolio accounts in your mutual fund. Are you able to see it at one go? Unless one or two of the names that are taken give you access to that. By and large, no. Your existing provider of financial services does not let you do that. And I would think that this will make the movement further in account aggregator services will make a big difference, because you will be able to look at your health, financial health as it were, at one go. And of course, while you are going to look at that, if you take a loan and you have made your bank statements available to your lender, the lender also will be able to monitor you, so that you then have a system which is working with full information and in a safe manner. By safe, I mean eliminating the sort of practices that we have seen, particularly mean the fraudulent practices. And this would be not only post the loan approval, fraud actually starts up before the loan is approved, is where you could have a fraudulent transaction happening, so that the bank is not aware exactly where the loan is going, and then you will get into a vicious cycle. And of course, it could also happen after the loan has been disbursed. So it allows you to, you as a borrower, you as a saver, to meaningfully raise money, and it enables the financial institutions and others to do business in a safe manner. But it is not only about easier access to credit, it is giving every individual the tools to manage their financial well-being, irrespective of their background or geography. And it is about creating an inclusive, transparent, and trust-driven system that will benefit every corner of our society. I am completely convinced about that, using the pooling of data that we are looking at, or access to data. And I must reiterate, this is a consent-based system. Nobody is going to steal your data. You are in control of your data. You have now taken control of your data, and you are sharing your data where you think it is important. I think you then will be able to better manage your own financial well-being. And this monumental shift wouldn't have been possible without Sahmati, which has been instrumental in establishing the system that we are talking about, the framework that we are talking about, and uniting banks, NBFCs, fintechs, and other financial services providers, whether they are insurance companies or capital market instrument services providers and regulators, to build a truly transformative a platform which will serve the country well. As we all know, that principles of data ownership are now clear. Individuals, not institutions, own their own financial data. And this represents a dramatic shift from a time when financial institutions controlled access to this data to one where individuals today are the true custodians of their financial identity. I think this is, to me, the underlying principle on which this whole platform will work. And as I said, if today it is $1 billion a month, $12 billion a year, and that is just the start of the exercise, you can see to what extent this will drive change. The legislative framework underpinned by the Data Privacy and Data Protection Act is robust and clear, creating a trusted environment for individuals to freely share their financial data with the consent of the user. This legislation is a cornerstone, ensuring that the data sharing ecosystem operates under a clear set of rules designed to protect privacy while facilitating growth. Public digital infrastructure is being built through the AA ecosystem, enabling access to verified, real-time financial information at the individual level. This is foundational in supporting India's unique vision of open finance. Together, these building blocks, the principles of data ownership, the legislative framework, and the public digital infrastructure are converging to create a structural change in India's financial system. The benefits of the convergence are multifold. I went through this paragraph in detail because this, to me, explains to a lay user and someone probably who is a bit informed exactly what and where we are operating in. And this should make it very clear and give the user the trust to use the system without any doubt in their minds. So what are the benefits of convergence? As I said, they are multifold. One is access. AA opens the door for individuals and small businesses to easily access financial products and services that are once out of reach, bringing more people into the formal economy. It does something more than this, just bringing into this. It allows you to do it directly. You should be able to do it yourself without going through an intermediary. I won't go into the story of intermediaries. They have done great service in taking finance to the masses. If I go back 25 years, they underpinned a whole lot of activities that the banking sector did because we did not have the sort of branch network that was needed to reach to the masses. But this now shifts power to the individual to do what otherwise was done through an agent in between the financial institution and you as a borrower or a person who wanted service from a provider. Compliance, second is compliance. With clear data privacy standards, compliance with data protection laws becomes simpler and more transparent, protecting both consumers and institutions. The third is cost efficiency. By removing the barriers to data access and reducing friction in the flow of information, costs of providing financial services decrease, making products more affordable. I think if you actually chat with the bank and or with the intermediaries, you will understand what sort of cost efficiency we are talking about. If I were to just phrase, typically when we were doing lending to the bottom of the pyramid through the MFI scheme, the intermediation cost is to be taken as 12 to 15%. If you can eliminate that through this advancement that we now have, you could bring down the cost by probably 3/4 of that number with only a marginal, and that enables the borrower to put to worthwhile use the money that has been borrowed, and of course also then ensures the probability of it getting repaid being that much higher because the interest rate certainly drops dramatically from being at a level we would, as bankers, call usurious. It was usurious not because you wanted it to, because the intermediation cost made it usurious rate, but this would bring it back. I briefly mentioned this fraud reduction. Verified consent-based data sharing greatly minimizes fraud and errors, increasing trust between institutions and consumer. Again, if you can do it, you can make it straight through, then a manipulated fraud that can happen in between is also is eliminated. Of course, indeed, this is a powerful transformation and its significance cannot be overstated. The framework doesn't just offer a way to share data, it enables an entirely new approach to how data is used, making it easier for individuals to access financial products, managing their money, and secure their financial future. I'll just give you a small story here. When a few months back, in the same vein, SEBI announced the Mutual Fund Central, an app-driven thing. And so I went on. It was absolutely seamless getting on. And of course, I could then see all my portfolio at one go. And I said, this product should now serve people who work for me. So I called, I had two young people working for me, one young and one not so young. They've come from some village and are working for me. And I know that their savings are only in either a bank account or money they have sent home. They may have a few cattle. They may be doing some farming and so on. So I said, would you like to invest in shares? They said, we don't know how. I said, you know how to look at WhatsApp, right? They said, yes. I said, what I'm going to show you is as simple as looking at WhatsApp. You have an app, you press it, you will know what is your khata every day. And of course, I suggested to them a SIP. I did a small arithmetic and told them, if you put a 5,000 rupee SIP, and I could start you on that into your SIP, after 25 years, you will get a corpus which is going to be more than 1 crore of rupees. So one of them started computing it. But I said, will you put it in? He said, I'm 50. By the time I get my money, I'm 75. So it's a practical problem. So we will have to solve it. The other guy was 25. He said, I want to start it. So basically, the power of compounding, the power of converting your saving into an investment and what it could do for you, I think if we can educate through this, it will truly be transformative to that set of people who we think are at the bottom of the pyramid today. Of course, as I said, you have the account aggregator, you have the India stack, all now working in sync. And we have now seen the impact of, for banks and NBFCs, having a holistic view of customer data would mean better targeted offerings, faster decision making, and more personalized services. I'm mentioning this because there could be hesitancy on the part of banks and institutions to be a part of this. I think it is for our good. I always think of myself as a banker. It is for our good because it enables me to have a better view of the customer to whom I'm lending at this point in time, and in the future as I continue with my relationship with the customer, where I will have to collect what I have lent back from him. For wealth managers and financial advisors, this transparency allows for truly customized investment strategies aligned with the client's goals, risk profile, and financial aspirations. In short, I'm saying that it allows you to better serve your customer through a wide variety of financial products, properly tailored and properly offered to the customers. Just as UPI revolutionized payments in India, I'm sure the account aggregator system takes it to the next level. So JAM, the first stage, brought in a bank account to those people who did not have the ability to get to a bank. Then you had the ability to transact using UPI. And now you have the ability to look at your balance sheet, improve your banking and financial health, improve your financial health, and transact in a way that you want to do. To me, this cycle now becomes more or less complete as we go along. I have been going off my written script as I want to do, and coming back to the written script, so that's why I'm looking at things. I'm not skipping what I had put down. So most of it I think I have covered. So let me come to my concluding thoughts. I was delighted to see that we have now crossed over a 10 crore number. Number stands increased to almost 11.5 crores just now. Consent-based and data sharing transactions. And this is a remarkable growth, a 10x growth. And I specifically wanted to compliment all the teams here to having made this possible. A 10x growth in a year on year is phenomenal. Of course, then I start compounding. I look at, that's why I said you do the X. And if 10x has given you enough of transactions in terms of loans, $1 billion a month, $12 billion a year, that's 1 lakh crores a year. This is 1 year. If the next turn is also going to be 10x, you are going to do 10 lakh crores. And if you are going to do 10 lakh crores, it's a very simple arithmetic that you can do. Look at the profits of the top 5 banks, multiply it by 10, that is how much they are lending in a year. And this number, if you do 10x of what you're doing now, is going to be a good 40 to 50% of that, and in the next 2 to 3 years. And that's just a start. So this, to me, could revolutionize the way lending is done in this country. I don't think we have still comprehended the power of what we are unleashing at this point in time. From a saving account to getting the payment system completely on a digital platform to now a lending system onto a truly digital platform. This changes everything that we know has happened in the past. And in all these things, making this happen and getting us to where we are today, I want to specifically acknowledge, I know the good work done by the Department of Financial Services, the Government of India, which has been pushing everyone to do this. The Reserve Bank of India, in their, I would say, absolutely textbook way in which they have gone about all the developments in the digital financial world, setting up sandboxes, encouraging, and where there weren't things, actually taking the lead in setting up, providing the initial momentum to happen. And then now Samati, whose leadership, vision, and dedication have been instrumental in bringing this transformation ecosystem to life in India. It's particularly inspiring to see how this was achieved with young, lean teams who have set a remarkable example for India to follow. And I think they well deserve this spontaneous show of appreciation. I just want to endorse something more. It's not only the lean teams. The young lean teams that are set up are a role model for all of us in the banking system. I think we need to work with more such young lean teams, and then the impossible will become possible for us as banks. Finally, only through a unified approach will we ensure that the AA framework scales effectively and responsibly. We are at the first step. We now need to scale it effectively and responsibly. I'm sure we will embrace this opportunity to reshape India's financial landscape, one that empowers every individual, enriching every community, and moving us closer to a future where financial security and opportunity are accessible to all. The work we do today will lay the foundation for generations to come. Again, my compliments to everybody involved in this task, and my compliments to everybody here who are taking this task forward, and I wish you a great success and great joy in everything that you are doing. Thank you.
Was that inspirational? For me, I'm not a person from this industry, sir. I felt like the Amitabh Bachchan of banking and finance was talking. So thank you so much for sharing your thoughts on convergence and compounding. And now we have Mr. B.G. Mahesh, who will just felicitate you as a token of our appreciation for you being here with us today.